Planning for retirement can seem pretty daunting. What investments to pick plays a major role in that. But recently, a major investment firm suggested a simple approach. Focus solely on growth instead of a balanced portfolio. But how much sense does that make, especially if you are in or nearing retirement? Well, joining us to discuss it, Taylor and Laurel Stewart, part of the family at Mattson Financial Services. That's a firm that's been helping people retire successfully right here in West Michigan for decades. You can also catch them on their popular radio show, Money Mentors. Taylor, Laurel, welcome back.
Thank you, sir.
Thank you.
Absolutely. What do you think of that simplified approach? Just focus on growth. Is that the best for when you're approaching retirement?
I think if you want to have a very passive strategy, it could work. If you look at the markets over time, typically about a third of the time they're down, right? So you're going to have to take the good with the bad, right? But that's not the approach that we like to take. We like to make sure that our clients, have that peace of mind, have that stress-free retirement, and with that comes all of these different areas of planning. Making sure that we've got our tax situation under control. What about guaranteed income, Social Security? When's the right time to take that? Making sure that everything is working holistically instead of just, we'll just put it into an S&P 500 index fund and just let it ride and see how it goes.
And Laura, we've been talking about growth. A lot of people, when they invest, that's what they want to see. They want to see growth. But if you are in or near retirement, is putting all your money towards growth the right strategy?
Yeah, it's very hard because what we like to come back to is the philosophy of, home runs and strikeouts would be what I think of when it comes to a growth strategy. Which when you're younger, right, and you have time on your side, you can handle those, hey, a third of the time it's going to go down, I have time on my side. But now we're talking about retirement, and people when they even start, approaching the mid-40s, I think have to start looking at the mindset of singles and doubles, not home runs and strikeouts, because we want to compound on that growth, harvest the gains, put that aside, and that takes a careful management strategy rather than what we see a lot of times, somebody signs up for a 401k, they're going to hit a target date fund and then let it ride until they, hey, I'm going to retire.
2065.
Kind of a set it and forget it type of mentality.
Yep.
Right. Yeah. So diversification seems to be a word we hear all the time. How important is that?
Very important from a tax standpoint as well as an investment standpoint, because 2022 is a perfect example. If you just had your typical balanced portfolio or 50-50 equities and fixed income or 60-40, whatever that may be, you were down a lot last year because the aggregate bond market was down about 13%. The S&P and the rest of the equity market was down more than that. And so if that was your strategy, last year didn't feel that great. So having that diversification where first and foremost we set up that income bucket so we know for the next 12 to 18 months we're good with income, something low risk, low volatility, but still getting a yield to it. And then looking at the rest of our investments, if we were diversified properly, last year was a great year to take advantage of an opportunity in the fixed income or equity market versus being scared of it or selling off investments and changing our strategy, making those emotional changes. So looking at other types of assets, whether it's structured notes or growth-oriented structured notes or income, real estate, private equity, commodities, you name it, looking at all of these different markets to making sure we have a good diversification approach.
And you mentioned, obviously an income strategy, all income might not be the best strategy either. So it's really about balancing.
It is, and we get to know each individual investor as the client to say, what is your comfort level with things? And so I met with a client, husband and wife last week, and they said, we want to take our risk analysis separate. We don't want to take it together. Let's see how our answers compare. So that was really fun to see. She said, I'm way more conservative. And then he would answer, and she goes, wow, that one really surprised me about you. So it's fun to hear that and get to know our clients through that risk piece.
This sounds like something we should do all the time.
Yes, it's good. It's free online, too. You can go to our website.
Can you really?
Yep.
All right. Check that out. You want to check that out online, right? You can probably do that right now. So avoid the big retirement tax bill, all right? Avoid that. That's important. Not all income, not all savings.
Right.
You need to balance and diversify it. And, of course, you guys have all of that waiting for, the first 5 callers. It's got a good deal, too, right?
Yes. So we'll offer that for the first 5, talking about that enhanced plan, the holistic enhanced plan with our Mattson Financial team.
Excellent. Well, it's a really good offer. You should check this out. Right there on your screen, we'll put the phone number up. There it is. There it is. Taylor and Laurel, thank you so much for being here. For you at home, there's your number. You want to take advantage of that special offer from Mattson Financial. If you're in or near retirement, Taylor, Laurel, the rest of the team, they all want to sit down with you personally to customize an enhanced retirement plan just for you. This is a comprehensive plan that includes a look at your investments, your income sources, taxes, and so much more to help get you to and through that retirement you deserve. Reserve one of those spots now. Just call 1-800-536-8907. That's 1-800-536-8907.